We're looking at the top 6 momentum companies on the ASX. These are the fastest movers on the ASX over the last week. We're going to zero in and see which companies have raced higher and led the market to be the fastest movers. We're also going to apply some fundamental filters. We're going to see which of these companies are fundamentally strong, as well as putting on the great performances. Because time and time again, it shows that if there's a fundamentally strong company with high momentum, it can consistently outperform. This is Final Market Points, where we're connecting those leading market themes and the top performing companies within that theme for better trading. You can like the video to support the channel, click subscribe for updates, or comment below to let us know which companies and themes you're trading. Now, when we have a look at the top momentum companies on the ASX, we're going to see some similar names that have been coming up week after week after week. And we're going to start off at PNR. Now, PNR, Pantoro Limited, has put on 19% for the month. Same thing for the week, and the quarter 66%, 50% for the last year. You can see this breakout here, daily chart on the left-hand side, churning along the red line, that 200-day moving average, building that base. If we bring this out a little bit, we'll see that this was creating a volatility contraction pattern. 1 contraction, 2, 3, and then 4 nice and tight. We've drilled down on the VCP, the Minervini's trading strategy, in great detail. Click on the screen to understand, see a video with that, with a download that walks through how to apply this. But that's where we also come up with the fundamental filters, because we want to know if these stocks are also growing with earnings and profit. And we can see these contractions are getting tighter. That basketball losing the bounce, each bounce consecutive, smaller and smaller. Helped that's on the 200-day moving average and the 50-day. If we drill in here, we're going to see if it does present a pocket pivot. That's a Gilmore and Chris Karcher pattern, which we see right here. This green, this solid green candle, the highest within the last 10 days, higher than any down day or red bar, we should say, down here. Critically, it's above the 20-day, 200-day, 50-day moving average and through the 10-day being that blue line. That's a pocket pivot coming out of the volatility contraction pattern right there. That's a breakout, what Gary Glover also calls the B wave breakout, happening right there with PNR, and then it shoots on up. This is now a criteria for a high and tight flag, but there is a congestion there which does slow it down, so you can look at that as another trading strategy as well. But this is coming at number 6 with that 19% return for the month. Moving on up, Grange Resources GRR. Now this is one that's been surfaced for consecutive weeks now. GRR, the chart coming in on the left-hand side. Explosive movement off that congestion that was around the 200-day moving average. That red line once again, shooting on up, coming from that 50-cent base, firing out to 65, and then kept going to where it has been in the last few trading sessions, around 85 cents. Solid movement, Grange Resources, GRR. As you'll see from Shares in Play, a whole other video series that we present, this is not the only one in its theme, and we're going to see that as we move on up to PLS. PLS number 4, it is not the only one in its thematic that's pushing higher. It's been surfaced with a few irons in the fire, but battery minerals are consistently pushing higher, as this chart shows, left to right, hard top right, what we see here. Moving from $2.70 in late December, bang, getting up $3.70 just yesterday. That's PLS, 6% for the week, 30% for the month, just under 60% for the quarter, and 115% over the year. We did look at PLS back here with looking at the volatility contraction patterns within lithium leaders, and how this was started by Liontown Resources kicking off that whole momentum, and for the next 2 to 3 months, we saw lithium companies push higher and higher and higher out of volatility contraction patterns. So we're putting a few things here together. We're looking at the volatility contraction pattern. We are applying fundamental filters for Minervini. We're also looking at the shares in play. We want to know that the theme's moving together. It's one thing to have a volatility contraction by itself, but as we've found with high and tight flags, we double the chances of hitting our profit targets if there has been a strong move from the thematic. So as it's coming through this VCP and tightening up, and then it breaks out, shoots on up, and then creates another volatility contraction pattern. We saw it once again after it broke out. They weren't alone, and then it runs into the rally that we've had here, December, January, for this space. And we're going to see a similar thing when we move up to SYR. Syrah Resources, 53% for the month, 14% the week, 63 on the quarter, quite close to that monthly 53, and 65 for the year. Bring this lens out over the 2 years, You can see that movement, that stalling, that really, there is a bit of a VCP here. Breaks out but fails. Creates another VCP, or if you want, inverted head and shoulders with this neckline on an angle before it breaks out 120, getting up towards 220 in the last couple of days. SYR getting themselves in range number 3, as we can see that congestions break out and then once again breaking out, so come up to the rally that it is in now. Moving on up, AVZ Minerals, we're going to see a great pattern breakout here, a great congestion. So we'll zoom on in here. As we're rounding coming out of a basing pattern, it does shoot up and then create, so from this 30-cent movement to 60 cents, it's created that high and tight flag. That's a video we've created. There's a download as well to walk through that pattern and understand how to calculate the flagpole, how it rallies up rapidly for 100% gain. Congest. Now this is quite a wild and whippy congestion, but the key point here is it's holding above halfway of that flagpole. So if the flagpole starts, let's make the maths easy, 35 cents and tops out at 70, you've got 100% rise there. We want it to maintain above the halfway line between 35 and 70, which it does do. It congests higher and higher, has trading halt, comes out, and then does break over that downline resistors. So there's a bit of a downtrend line within this pattern, congestion, whether it's coming into an apex, call it what you will. It does break out and does it with a decent amount of volume, and then it tries to shoot above for new highs, gets sold back down and congests once again. But these congestions, these are inside days that we are seeing some of them here, and that tighter congestion along this 10-day moving average. Before it presents another opportunity, so there's a pocket pivot, but it's not the tightest congestion. We want to see another one here. There's your breakout. That from a Gil Morales and Chris Karcher perspective, we're looking at the pocket pivot side of things here. As we're seeing this congestion move along here, tighter closes, which is good to see. Selling's been exhausted from a Wyckoff perspective. We've got the volume really depleted here. It's inability to close lower, tight closes, and then what we see here is a strong candle with a rise in volume out of this congestion period. So it is a broader move, a broader candle, a higher rise, greater body in the candle. So we do want to see the reward for effort, and we do see a fair bit of effort in here with volume going through. But it is the highest in what creates the pocket pivot and then leads to that next breakout, where it's come just under $1 in the last trading session. That's AVZ, and you can see on the 2-year chart, huge movements, massive rally. We're going to come to the first one. A lot of these companies have been surfaced, PLS, SYR, AVZ, and also Brainchip that's come in number 1 this week. They've been surfaced week after week because they are leading momentum. This chart shows huge momentum, 40 cents to $1.40 in a matter of about 3.5 months. Solid rally. We do see that it came under the 200-day moving average, had a bit of resistance coming back through it. This is critical because a lot of traders do use this 200-day moving average, and we see that it's tried to get back to it. In our studies, we found the first attempt to breach or come back through the 200-day moving average is normally failed. And we can see that congesting under here, it becomes a bit of an absorption line, this overhead resistance, creating a lot of the volume drying up. This lower volume here in October, November, than what we see throughout the Christmas period when the market's closed. These lower volumes here, we end up seeing the days around it when a lot of the countries on holidays is actually higher than October, November to transition. It is quite wild and volatile, and then breaks out 4th of January, shoots the lights out if it starts trading for the year, and then just doesn't look back. Doubles in price over that period. BRN, definitely the highest momentum company, but this is where we transition over to want to see whether they have fundamentally strong companies that are providing high momentum as well. We've zeroed this down to the top 6 companies, and we're going to run through starting off with IGO in its 6th place. Fundamentally strong company. IGO is fundamentally strong, but also showing that momentum. Clear to see $4.50 back here in November. Last year, $12.50 today. We bring this in for a tighter range. We do see, before we do, we're going to see this congestion period here. If you want that to be a cup and handle in the assessments that you look at, or whether you're applying a VCP, it doesn't really meet it with this big drop down here. Then you've also got another congestion period here, and we do see it break out. So it's failing, its inability to close lower. That's where we look at it from a Wyckoff spring perspective. It's a download on that to work through in your own time, a bit of a worksheet if you will. But a Wyckoff spring looks at undercutting this low, tries to rally back up, but fails, comes back down. Retests this low, bit of a support area as well. Shows with this candle its inability to close lower. Now, it doesn't have follow through selling on the next day or the day once again. There's no exhaustive volume. It's not being capitulation. It's not turning around. Ideally, we want to see exhaustive volume like we see here and here with the spring to show that there's capitulation, but it really hasn't had it. The volume's dried up. It rallies a little bit, but congests, doesn't come back down and retest the spring, just sits up in this sort of average volume. But then it shows on this candle here that it's a tight range. This is where we have an anomaly. We've got a tight range on the candle. Zoom in so you can see. Tight range on this candle here with a higher than average volume. That says that something's amiss here because it's an inside day. It's a relatively tight range in comparison to the others, but it has increased in volume. So that says that something is amiss here. The next day it goes up with lower volume, which is not confidence inspiring for the trend, but it just keeps rising and rising with that higher volume. Congest once again above this overhead resistance, but these tight closes within 30-35 cents or so. Drops down, gets pushed back down to retest this period. It does it with lower volume than we've seen. So there's a miss here. We've got another tight close with high volume, then it gets pushed down. But this drop here, we've got an anomaly. This is a bit lower volume with a massive body in the candle. Something to miss. It's tightened here. We've got tighter closes. Its inability to really close lower. While it does close back down near the lows here, it does it with very low volume, reasonably low volume, and then it manages to climb back up here, not with increasing volume. We get a congestion once more, but it just shows that it's not really pulling back. It's just continuing to climb and climb to where it just comes up to $12.40. So it continues to push on up. That's IGO. That's coming at number 6. We'll move on up to GSS. Now we've got genetic signatures, 33% for the month, 23% for the quarter, and down for the year. This is where we want to be looking at the basing patterns. This gives us the opportunity to get something, whether it's a fallen angel or something recovering, because it has come down, it's rounded out a bottom, spent a lot of time under this 200-day moving average, that red line, and then it congests. As we've said before, getting back over that red line can be difficult for stocks. It has struggled to get over that 200-day moving average. The first rally gets out but fails, is pulled back in. The second one tries again, fails, and gets pulled back in. It's trying to get over the 200-day moving average after these massive highs up near $3, being pulled back down near $1. That hot, wet blanket, red line, 200-day moving average, keeping it under pressure. We're going to zoom in to see how it toys with getting over that. See the first rally, tries to get over it, fails, pulled back under, tries again, fails, gets pulled back under. And then it's trying once more, but does it with rapid speed. This is the third attempt to get over. First, second, third. Does it with a bit of a volume breakout, but we are seeing its inability to close. It's just, we're getting a lot of lower wicks here, a lot of the buying in the lower parts. So this is stopping volume, a bit of a turning. Think of it as rounding a corner. If you go around a corner, doing surfing with a cutback, rooster's tail on motorbikes, you're going to see that spray coming back out. Think of these wicks as that spray as it's turning the corner and rounding the bend, and then shoots on up. This has created that congestion that we like to see. We want it to maintain at least half of that rally, sit at the top end, and then that can be a good base to come back out of. Looking at this 170, 180 level, you can see there's a bit of resistance here before, a bit of support. So that has turned into resistance, and we are seeing that play out at the moment for GSS. We'll then move on over to the next one, GRR Grange Resources. We saw it rank as number 5 for momentum, so we don't need to drill on down on that one again, but it has been a few consecutive weeks coming up. Apply the fundamental filters and move on over. Fortescue Metals is once again coming up. Great momentum coming from the VCP that we've looked at here in finer detail, and then it's continued to march on over. First attempt to get over the 200-day moving average failed. The second one that's continued to push on through for now. Good momentum, fundamentally strong company, reasonable dividend too. Next, second place, CIA. Champion Resources, 24% for the month, 10% for the week, 21% for the quarter, for the year, 30% for the quarter. We do see rounding bottom here. We're going to zoom out to get that movement. Has been a wild ride, $3, $7.50, belted back down to $4, turned the corner and is climbing back up. That's where we're seeing the momentum. But it is a fundamentally strong company, so that's got it ranked number 2 for the week. Number 1, BHP. It's rare to see a high capitalized company in here, but market leading is what it's doing. It has rounded the corner. You'll notice huge similarities, and we've looked at correlations before. This is something we do at Shares in Play, is look at the correlations for those leading market thematics. If you're looking at Champion Iron, you're going to wonder what that company does. But it's similar to Fortescue Metals and BHP. They're in that same camp. Iron ore has been leading, and it's the profitable companies that we're looking at here, fundamentally strong companies. $36 to $46 for a blue chip leader to do that from late November to where we are early mid-January. We can see solid rally there. That is the top rank climbing company, what we call high velocity. It's round the corner and shot on out. This is great movements for the company. We've got good solid momentum, fundamentally strong. This is BHP coming in at number 1. Tomorrow we'll drill down into high velocity companies, and you can have a look at that. So click subscribe down the bottom, click the bell to get the alerts, and we're going to run through how to identify the companies in this basing pattern before that rally starts. Momentum's after the rally started. When it's well and truly in place, it's identifying it down at these turning points that we do with high velocity, and we dovetail that in with understanding these thematics when we're looking at the leading themes, because they don't just run by themselves. We've looked at it with uranium, lithium, graphite, nickel, and here we have iron ore doing it. We're going to look at them in a group, and that's what we do in Finer Market Points.